Bitcoin's value has skyrocketed, and its future potential to supplant global currencies is exciting for many. According to experts and speculators, BTC's price could reach more than $1 million per coin. In addition to the SEC's approval of spot Bitcoin ETFs, there are several other factors fueling expectations for an upward trend. But will it continue? Price analysis. A variety of factors are expected to push Bitcoin prices higher in 2024. For one, a spot ETF approval would likely lead to increased investor interest in the cryptocurrency. This is a significant milestone because it would allow investors to invest in the currency without buying physical Bitcoin. This could potentially funnel $30 billion or more into the cryptocurrency. Another major factor is the 2024 halving event, which occurs every 4 years and reduces the rate at which new Bitcoin is created. This has been a key catalyst for previous Bitcoin price surges and is expected to continue driving demand in 2024. In addition to these events, many analysts are predicting that the recent price rebound is a result of renewed positive sentiment toward cryptocurrencies and Bitcoin in general. However, these gains may not last long-term. Several factors could cause the market to crash, including security risks and hacks that have become a daily occurrence in the space. Additionally, skeptics argue that the current rally is simply due to a massive bubble. Cryptocurrencies are not regulated and investments in them are highly risky. As a result, you could lose your entire investment if things go wrong. This is why it is important to research the market and read up on the latest news before making any investments. Lastly, it is important to remember that the price of Bitcoin can fluctuate drastically and dramatically on a short time scale. This is because the crypto market is much smaller and less liquid than traditional markets, meaning that big trades can radically change prices. This is exacerbated by the fact that Bitcoin's supply is fixed, and that large holders, also known as whales, have an outsized influence on the market. Despite its volatility, Bitcoin is still a viable investment in the long term. Many experts believe that it will enter a new bull cycle in 2024, with the price likely to increase by about 4.5 times its peak value of $29,000 in the last bull run in 2021. Ultimately, the price of Bitcoin will depend on the success of new products and services that utilize blockchain technology. Supply and demand. The price of Bitcoin has been volatile over the past year, but some experts believe it will reach new highs in 2024. Here are some of the factors driving this prediction. Bitcoin's limited supply and a lack of regulation make it attractive to investors. It is also not subject to monetary policies, which can have negative effects on other assets, including stocks and bonds. However, Bitcoin's volatility is also a drawback. Investors who buy the asset can expect significant losses if they sell their holdings. This volatility makes it hard for the currency to serve as a stable store of value. In addition, Bitcoin's low liquidity can make it difficult to buy and sell at the prices you want. To mitigate these issues, Bitcoin is becoming more widely accepted by institutions. As more companies and individuals invest in the cryptocurrency, its price will increase. In addition, increased adoption will reduce transaction fees and improve security. According to Leo Mizuhara, CEO of Hashnote, the growth of Bitcoin's user base will lead to more stable price levels. He believes that the price of the cryptocurrency will stabilize at around $6,000 per coin in 2024. The upcoming halving event is another reason for bullish Bitcoin predictions. The halving will decrease the amount of new Bitcoins that are mined, which will make the existing coins more valuable. This event has triggered price surges in the past, and it is expected to do so again in 2024. Institutional adoption. The growing acceptance of Bitcoin by institutional investors, such as hedge funds and investment banks, will push its price higher. This is because these entities typically look for stable investments that have the potential to grow in value over time. The SEC's approval of spot Bitcoin ETFs will also boost the price. This is because these products allow investors to trade the cryptocurrency without having to own physical Bitcoins. Moreover, the ETFs will encourage investors to invest in the digital asset by adding a level of legitimacy to it. This will in turn raise its demand and propel it to new highs in 2024. The halving effect. The halving effect is expected to boost Bitcoin prices as it slows the pace at which new coins are created. The upcoming event has been anticipated for months by cryptocurrency traders, and the increased demand should lead to a higher price tag. The impact on mining companies is less clear-cut. Bitcoin miners take a financial hit when the reward for their work is cut because they have to cover the energy and equipment costs of operating their operations. They can compensate for this by increasing their transaction fees, but they will still be at a loss. Many analysts believe that the halving will cause short-term volatility in the Bitcoin market. This is because the supply-demand dynamic will be out of balance. However, the long-term outlook for Bitcoin remains positive. According to CoinCover, the halving will help reduce Bitcoin production costs and could lead to more stability in the market. It will also likely encourage more investment, which could lead to greater adoption of the digital currency. Bitcoin's creator, Satoshi Nakamoto, set a limit of 21 million coins to ensure that the issuance of new tokens wouldn't devalue the coin. This scarcity is a key component of the crypto's value, and it's what makes it different from traditional fiat currencies that can be printed at will. Past halving events have resulted in significant price increases, which is a positive for potential investors. The current halving cycle has been particularly interesting because of the recent launch of Bitcoin ETFs, which are attracting the attention of institutional investors. While the halving is sure to impact the market, it's important to keep in mind that cryptocurrency prices are largely driven by demand. It's the traders and other investors who decide whether or not to buy into a particular asset that drives its price. Ultimately, this is what will make or break the halving effect. However, it's essential to follow the market and plan accordingly. By staying informed, you'll be able to make the best decisions for your crypto investments. Institutional adoption. The growing acceptance of Bitcoin has ushered in a new era for the digital currency. Large financial institutions have begun to invest in cryptocurrency assets, which has bolstered the market's legitimacy. The increased institutional activity has also improved liquidity and reduced volatility. However, it is important to note that the arrival of larger investors could be a double-edged sword. The entrance of big finance into the crypto market could lead to an increase in regulatory oversight, which may negatively impact the cryptocurrency's future value. Furthermore, if large investors are forced to purchase Bitcoin through exchange-traded funds, ETFs, they will likely face high fees and risky trading strategies. Currently, the only Bitcoin ETFs approved for trading in the US trade in futures, which are complex derivative instruments based on the price of an asset. The approval of a spot Bitcoin ETF would require the investment of real, physical Bitcoin, which is expected to drive prices up significantly. In addition, it would bring a much-needed air of legitimacy to the crypto market and encourage additional investments. Aside from the aforementioned benefits, many investors are attracted to Bitcoin's perceived role as a store of value. In a global economy full of inflationary pressures, cryptocurrencies such as Bitcoin are seen as a good hedge against devaluation of fiat currencies. Additionally, the limited supply of Bitcoin is designed to maintain its value by reducing the amount of new coins entering the market. As such, many experts believe that a combination of increasing demand for Bitcoin and decreased supply will push the price higher in 2024. This is particularly true after the next Bitcoin halving event scheduled for May, which will further reduce the supply of new coins entering the market. Historically, halving events have triggered price surges as the demand for the cryptocurrency increases. This is an excellent example of the law of demand and supply at work.